Federal government approves 2018 fiscal policy measures. PENCOM orders pension fund administrators to return 5% lump sum to retirees. Federal government secures $1.5 billion fund for power transmission. Plus, foreign exchange inflows hits $91 billion in 2017. Details of these and more coming your way on this edition of Business Express. I am Amina Nojaim. Thanks for joining us. In the news today, the Central Bank of Nigeria, in its bid to ensure efficiency in the foreign exchange market, has organized a stakeholders forum to address questions regarding the bilateral currency swap agreement between the Central Bank and People's Bank of China.
So this is a stakeholders forum organized by the Central Bank of Nigeria to address some of the questions arising from the bilateral currency swap agreement between the CBN and the People's Bank of China. A lot of questions bordering on the workability of the agreement has been the focus of discourse among stakeholders. To address this situation, the stakeholders forum cleared the air on grey areas in the agreement.
15 billion renminbi, and we will give them 720 billion naira. That is the cross equivalent, because both amounts are equivalent to $2.5 billion.
The currency swap, no doubt, will address some of the foreign exchange problems affecting the strength of the naira in the primary and secondary markets and boost business operations between Nigeria and the People's Republic of China. The meeting also looked at an overview of the agreement, the operation of the swap, regulations for transaction with authorized dealers in renminbi, the modes of payment, applicability of the existing guidelines, and potential benefits for Nigerians, among others.
That they believe will enable Nigerians who do business with China pay in renminbi, so that you do not need to look for a third-party currency, which is the dollar, which is what we use up to this moment to pay.
At the end of this meeting, stakeholders were fully equipped as to the workability of the currency swap agreement between the CBN and the People's Bank of China.
In another development, the Central Bank of Nigeria says it will be refunding cash reserve ratio (CRR) to banks that fund projects in agriculture and manufacturing sectors. CBN Director of Banking Supervision Abdullahi Ahmed, who disclosed this, noted that the outlook for the economy in 2018 is much better than 2017, while adding that the CBN had been very supportive to banks. Ahmed said they should be able to lend to companies that are doing new capital expenditures and expansions to factories using some of their cash reserve ratio (CRR) at 9%. The cash reserve ratio is a portion of banks' deposit kept with the CBN. And the CBN of Nigeria says the aggregate foreign exchange inflows into the country stood at $91 billion in 2017. The bank, in its 2017 annual report, stated that the figure was an increase of 45% from $62.75 billion in 2016. Governor of the central bank, Mr. Godwin Emefiele, also said the figures surpassed the total outflows by $57.32 in the period. He added that inflows through the CBN was $42.17 billion, while inflow through autonomous sources amounted to $48.33 billion. The Transmission Company of Nigeria, TCN, says it has secured $1.55 billion from multilateral agencies to revive some critical projects and expand the transmission grid. Interim Managing Director of TCN, Mr. Yusuf Muhammad, said the intervention came from the World Bank, Africa Development Bank, Islamic Development Bank, and European Union. He said the strategy is that companies that have approached the multilateral donors and have been able to raise some significant money. He added that they have also resuscitated some projects that had not been doing well, like the Abuja Transmission Company, which is supposed to provide 3 substations and provide another avenue for supply through Abuja from Lafia. And the National Pension Commission has directed pension fund administrators to pay additional 5% lump sum to retirees that were initially paid 20% of their total balance in their retirement savings account on retirement. Those whose lump sum payment was also low as 16% would get extra 9% of their retirement savings account. The Commission gave the directive after it had directed all PFAs to revert to the old template of 25% minimum lump sum payment. This is due to public outcry against PENCOM's reduction of the lump sum payment to retirees under the contributory pension scheme from 25% to 20%. And now to oil matters. The Nigerian National Petroleum Corporation is seeking clarification on the funding structure of the proposed Nigerian Petroleum Asset Management Company in the Petroleum Industry Governance Bill. Group Managing Director of NNPC, Dr. Mekan Tibaru, said the bill focused on key governing institutions in Nigeria's oil and gas industry and also aimed at separating regulatory, policy and commercial roles of public sector agencies. The NNPC boss said it also allotted respective roles to agency properly positioned to perform them and that it was important to adequately clarify the funding pattern for the proposed NPMFC and the Liability Management Company. The federal government of Nigeria has approved and ordered the implementation of the 2018 fiscal policy measures effective 27 July 2018. The 2018 fiscal policy measures replaces the 2016 fiscal policy measures, which has been in force since 17 October 2016. Fiscal policy measures have been regularly used by federal government to influence investment, production and consumption activities in the country. Machinery, equipment and components imported for setup of modular refineries would now enjoy a duty-free segment. It would be recalled that the federal government recently granted licenses to operators of modular refineries. This is duty-free concession to operators of modular refineries is in line with federal government's objective of increasing local refining of petroleum products and finally putting a stop to importation of petroleum products. Tariff on some tobacco, alcoholic and tomato products have been increased, while some tomato-related products have been prohibited from importation. To discuss the federal government's approved implementation of the 2018 fiscal policy measures and other developments in the economy, we are now being joined in the studio by an economist, Durojaye Phillips. Thanks for joining us on Business Express.
Thanks for having me.
Right. What do you make of the federal government's decision to institute the 2018 fiscal policy measures?
To me, I think the federal government is doing something in the right direction. The step they are taking is a good step in the right direction, because if we want to improve our local production, we need to discourage importation, and this tariff will definitely discourage importation and improve local production of some goods. For example, talking about tomatoes, the local demand for it will increase if the tariff on tomatoes importation is increased. So I think this is a good policy by the federal government to improve our own local production of some specific goods. And talking about giving a free tariff on some things like importation of refinery machineries, we will really benefit from this, because that will help us improve the number of refineries we have in Nigeria. If people that want to build refinery can have free tariff on their on the machines they're going to use, that will encourage them to invest more in our country. So I think it's a good step in the right direction by the federal government.
Okay, a good step in the right direction. Let's talk practically. What do you expect to see this policy producing? I
expect the policy should produce more of production in Nigeria by Nigerians. People should produce more because there's markets now for what you are producing. What's it called? The competition is being taken out when you have to compete with imported goods. Those are being taken out. So people should produce more. I expect to see more of that if this policy is properly implemented. So I expect to see more of local production of some goods.
Okay, I'm talking about encouraging local production. Syringes, for example, the 5% has been shifted to 70%. Do you see local manufacturers responding, considering the fact that some of these companies have shut down?
Yes, they will respond. Yes, they will. Because why many of them were shut down is because they can't compete with what is brought from the foreign country. They can't compete with it. They don't have the capacity to fight for the market. Now, when it's being discouraged, considering the fact that it's being increased from 5% to 70%, many people will want to patronize the one that are imported. They will stay with the one that are produced locally. And that is a wake-up call for people producing syringe in Nigeria to go back to work and get something out. Because if people are not getting the one from outside country, for example, if I'm an importer and my tariff has been increased from 5 to 70%, I will be discouraged to bring anything in. I won't do that. Then we will have a market for local production. So people producing locally can now go back to work, open their shop and start producing, because people will definitely demand for it and there will be market for it.
Okay. Durojaye Phillips, we will take a short break, then continue our discussions. Moving on to the second leg of our discussion, Durojaye Phillips is still with us. Now, as blockchain technology continues to shape the world of business around the globe, the World Bank has mandated the Commonwealth Bank of Australia to arrange the world's first blockchain bond. According to the global lender, the bond is the first in the world to be created, allocated, transferred and managed with blockchain technology. When launched, the bond will be both issued and distributed on a blockchain platform operated by the World Bank and Central Bank of Australia, CBA. Now, Mr. Durojaye, New frontiers for new investors, blockchain bonds. What do you make of this development?
I am personally happy about this development.
Okay.
If an institution like World Bank is rising up, bringing such an idea, I think it's a wake-up call for other financial institutions. The truth is this: we will need blockchain. The whole world is moving towards blockchain, and that is the truth. So the World Bank, in its own way, has come up with an idea to put an operation on blockchain. That's a wake-up call for the rest of the world, that the world is moving toward blockchain. It will look like the day of internet. When things started moving to internet, now everything is on internet. The same thing, blockchain, looking at the advantage of blockchain, the world will need blockchain. And the World Bank is taking the right step also in the right direction. So I believe they are doing something fantastic, and it will be good. And this will also clear some doubts about the issue of blockchain, and maybe can it be used, can we use cryptocurrency and all that. So the World Bank is doing something meaningful, and I love that.
Okay, it's a new development, but then not everybody is knows much about this blockchain technology. So if I'm to ask the difference between conventional business, financial institutions, and blockchain, what would be the difference?
I'll tell you, one is built on centralized system, and the other is built on decentralized system. Blockchain is a decentralized system.
Okay.
So the other one is a centralized system. So that is the major difference we have here, and decentralized systems are better than centralized system.
Is there anything to be mindful of, considering the fact that there's use of technology?
Yes.
Issues of security comes to mind.
Yeah, we should be mindful of so many things. For example, we have so many projects that are coming on blockchain, especially and some cryptocurrency that are coming on blockchain, and they are scam. They are not actually cryptocurrency. They are using blockchain to deceive people because it's a new technology. Everybody wants to come in, and so people need to be careful when it comes to in terms of investing in any blockchain technology. So they need to do their primary assignment, know what you are doing exactly before you put your money in anything called blockchain.
Now, talking about putting in your money, the Central Bank of Nigeria has called for caution on cryptocurrencies. Now, for Nigerians who want to invest in cryptocurrencies, any advice for them?
The World Bank or Nigeria
Central Bank of Nigeria.
It's a funny one because if institutions like Advert, MIT are showing interest in blockchain and cryptocurrency, we also should show interest. Actually, there have been a lot of issues on ground, like people lost their money in blockchain. What I will tell people to do is this: be educated, get education about cryptocurrency and blockchain. What are they about? And the World Bank, instead of banning it and call it an illegal action in Nigeria, they should call experts and ask them what exactly is this thing about. Maybe it's something beneficial. Look at the benefit of blockchain. Okay. We as a country, especially as a developing country, we can't throw it aside. Okay. It's something we should take advantage of.
It's been a pleasure talking to you on Business Express today. Let's do it again.
Thank you, ma'am. Thank you for being here.
Okay. Now, moving on, the federal government has presented certificate of registration to 5 new national commodity associations in the country. This is to enable them export made in Nigeria goods to other climes in the world. Gufan Shaji has this report.
Since coming on board, the Buhari administration has indicated its desire to diversify the economy by reducing over-dependence on oil. To this end, the federal government initiated strategies aimed at enhancing production of not only the traditional agriculture export crops such as groundnuts, but produce such as snails, cowpeas and beans, hides and skin, pumpkin and others that have high potential for export. To realize this, the Minister of Industry, Trade and Investment presented certificates of registration to 5 new commodity associations to facilitate non-oil export to enhance revenue generation for the country.
As you receive the official mandate to operate from today, you must ensure the competitiveness of your products in the international market through quality enhancement, improved yield, good packaging, and so on.
The associations are to explore windows of opportunities to increase production and marketing of relevant commodities.
We must exploit the opportunity to create employment and put food in the table of Nigerians.
With the presentation of certificates to these commodity associations, it is hoped that they will key into government programs such as the Buy Made in Nigeria initiative to enlighten Nigerians on the benefits of using made in Nigerian products for both domestic and industrial purposes.
In the capital market, the reign of the bears remain unbated. Muplang Dakok is our guide.
Transactions on the floor of the Nigerian Stock Exchange closed on a downturn Thursday as the reign of the bears persists. The NSE All Share Index declined by 1.29% to close at 34,618.43 basis points. Investors exchanged 200 million shares valued at over 3 billion naira in 3,162 deals. UBA, Guarantee and FBNH were the toast of investors exchanging over 20 million shares each. Market breadth closed negative as Equity Assure, Port Paint and Link Assure led the price gainers. The losers table was topped by Air Service, NIMET and Sky Bank.
Global shares mostly higher on hopes for China trade talks as Turkish lira survives onslaught. Let's take a summary of market activity.
In Africa, stocks were a bit mixed. South Africa's FTSE JSE Africa Top 40 rose 1.80% and closed 50,506.38. Ghana's GSE Composite gained 0.06%. Namibia's overall index 1.97%. Tunisia's Tunidex also advanced 0.17% and closed 8,365.76, while Kenya's Nairobi All Share slipped 0.44% and closed 173.95. Bourses in Europe climbed higher Thursday following China's acceptance of an invitation from the United States to talk trade August. The FTSE 100 in London, which is heavily influenced by mining stocks, ended the day 7,556.38 to 0.78% higher. CAC rose 0.83% and DAX also gained 0.61% and closed 12,237.17. In the United States, stocks also closed higher on renewed hope that a resolution to a trade dispute with China could be on the horizon. The Dow Jones Industrial Average posted its biggest one-day gain since April 10, when it surged 429 points. It gained 396.32 to 25,558.73. The S&P 500 rose 0.79% to 2,840.69 as consumer staples and telecom outperformed, and the Nasdaq Composite advanced 0.42% to 7,806.52. On the Asian markets, stocks slipped after China announced its plan for a new round of trade talks with the United States. Shanghai Composite lowered by 0.63% at 2,705.97. The Hang Seng Index depreciated 0.82% and Nikkei also slipped 0.05% to 22,192.04.
And that's a wrap on Business Express for this week. Let's do it again on Monday. Thanks for watching. I am Amina Nojaim.